Welcome to the May 2026 SECA webinar, The Evolution of Blockchain and How Insurers are Leveraging the Technology. I'm Paul Berry, Executive Director for SECA. The Collision Industry Electronic Commerce Association, or SECA, develops and promotes electronic communication standards that allow the collision industry to be more efficient. We also provide webinars like this one to help educate both members and non-members on trends that impact systems, processes, and the exchange of data across the industry. Today's presenter is Eric Phillips, Senior Director of Product Operations for the Institutes RiskStream Collaborative. As we start the webinar, I want to remind you there is no verbal communication between the participants and the presenter. If you have questions during the webinar, please type them in the question panel on the webinar screen. And we'll answer as many questions as possible at the end of the presentation. So now I'll turn the program over to Eric Phillips.
Thank you, Paul. I appreciate the introduction and welcome everyone to today's session. I appreciate your time and I'm looking forward to an insightful discussion today. We'll start with a brief introduction. A little bit about myself. My name is Eric Phillips. As Paul mentioned, my role is Senior Director of Product Operations at the Institutes RiskStream Collaborative. I've been in the insurance industry for about 12 years. The first 9 years of my career were spent in claims. I worked at a large personal lines auto carrier in various claims business unit leadership roles. About 3 years ago, I joined the Institutes and the RiskStream team, leading our product efforts. My role at the Institutes is to work with our member organizations on designing, building, and implementing innovative technology solutions. So I'm very grateful to be here guiding your session here today. A little bit more detail about who we are at the Institutes RiskStream Collaborative. Many of you may be familiar with the Institutes, our parent nonprofit company, best known for education and credentialing of risk management and insurance professionals. The Institutes has around 20 affiliate organizations underneath that banner. RiskStream is one of those 20 affiliates, and we are a tech hub, a 501c6 nonprofit membership organization underneath the Institutes. We have created a business network at RiskStream comprised of carriers, brokers, and reinsurers. We have over 30 active members, and our goal with that business network is to collaborate on leveraging various technologies like blockchain and others to help solve multi-party business process challenges. You'll hear me say multi-party a lot because really that's the sweet spot for a nonprofit organization like RiskStream, helping with challenges where multiple organizations need to interact or share data. So overall, RiskStream serves as a multi-party tech hub, aiming to help our carrier, broker, and reinsurer members by delivering innovative technology solutions. Let's talk about today's agenda. Today's session will focus on blockchain. First, we will begin with a high-level overview of some basic blockchain concepts. The goal of this portion of the presentation is for all of you to come out with a better understanding of some basic blockchain fundamentals. Second, we will begin applying blockchain to some insurance-specific use cases. We'll talk about some examples where blockchain is currently being used in insurance or could help the industry. The objective of this portion of the presentation is to explore practical insurance use cases for this type of technology. Third, we'll focus in on a specific blockchain use case involving auto claims data exchange. This is a real-life use case solution underway at RiskStream, live with major auto insurance carriers participating. And the objective of this section is to hone in on a specific blockchain use case and its benefits to the insurance carriers in the auto claims world. Lastly, we will wrap up today's session by taking a future-facing look at where blockchain can go next. And we'll also have a portion dedicated to audience Q&A. So please feel free to submit your questions or discussion topics in the chat. Let's get started with the first portion of our presentation. We'll discuss some high-level blockchain concepts at a beginner level so that you can better understand what is blockchain and what are some of the key characteristics of blockchains. The big idea is that blockchain is like a digital notebook that's shared among many computers. Everyone can see and agree what's written, but no one can erase or secretly change what's there. Why is that important? Because it allows everyone in a network to verify transactions. And once something is added to a blockchain, it's extremely hard to alter, which creates trust without a middleman. It removes the need for a central authority like a bank or a notary to confirm records. And you can imagine a supply chain tracking system. Imagine a shipment of coffee beans where every step from the farm to the roaster to the cafe is recorded on a blockchain. Customers can scan a QR code on their coffee bag and see exactly where their beans came from. And that type of transparency builds trust and accountability because data can't be faked or altered or changed. Think of it like a Google Doc. Everyone can see and edit that in real time, can always see the latest version, and all changes are recorded. But with blockchain, no one can delete or secretly alter the history. It's permanent. At a high level, blockchain is a decentralized record-keeping system that makes data secure, transparent, and trustworthy, a digital foundation for transactions. A little bit about the history of blockchain. While we think of blockchain as a somewhat new age technology, the history of the idea expands way back. Back in 1991, two researchers, Stuart Haber and Scott Stornetta, wanted a way to timestamp digital documents so that they could not be tampered with. They essentially invented the concept of chaining records together. However, no one paid much attention at the time. Moving up to 2008, an anonymous person or group called Satoshi Nakamoto published a paper proposing a new type of digital money, one that did not need a bank. The secret ingredient behind that idea was that there is a blockchain to track who owns what without any type of central authority. In 2009, Bitcoin goes live, and that theory becomes a reality. The very first block of Bitcoin data, called the Genesis block, was created. And for the first time, people could send money digitally, peer-to-peer, with no bank involved. In 2015, Ethereum launches. Ethereum took the idea further. Instead of just tracking money, it let people write smart contracts, which are self-executing agreements coded directly on a blockchain. Think of it like a vending machine. You put in the right input and get a guaranteed output with no human needed. In 2017, things went more mainstream. Bitcoin's price shot up to 20,000 and blockchain became front page news. Companies, investors, and governments scrambled to understand the technology. And this is when many non-technical folks first heard the word blockchain. And looking at today, we're starting to see real world adoption. Today, blockchain is being used beyond cryptocurrency. It's being used for tracking food safety and supply chains, securing medical records, powering digital contracts, and enabling non-fungible tokens, which are digital ownership certificates. So really moving from idea and hype into practical infrastructure. Again, the core promise of blockchain is simple: a shared tamper-proof record that everyone can trust without needing to trust any single person or institution. That is a genuinely new idea, and we're still in the early chapters of where it will ultimately lead. Now let's talk about some key properties of blockchain. First is immutability, or trust in what's written. Once data is added to a blockchain, it can't be changed or erased. Think of it like writing in permanent marker. If a mistake is made, it's recorded, but never deleted. This makes blockchain a reliable source of truth and tracking because everyone knows that the records haven't been tampered with. The second key property is transparency. Everyone sees the same truth. Blockchain is really a shared ledger, so all participants can see the same version of the data, and this eliminates confusion and builds accountability since no one can secretly alter the information. Transparency helps foster trust between parties that don't necessarily know each other. The third key property is decentralization. The power is shared and decentralized and not controlled and centralized. So instead of being managed by a single organization like a bank or a government, a blockchain runs on a network of computers. This prevents single points of failure and reduces bias and manipulation. And decisions come from consensus, not authority. Through these three properties, immutability, transparency, and decentralization, they all work together to make blockchain secure, trustworthy, and fair. There are different blockchain setups ranging from completely public blockchains to private blockchains. Public blockchains are open to everyone. So they are completely open networks where anyone can join, view transactions, and participate in validating data. Examples like Bitcoin and Ethereum. And the key benefit with public blockchains is they provide maximum transparency and decentralization. No single entity controls the network. That said, there are trade-offs with public blockchains. They can be slower because every transaction must be verified by thousands of participants. Privacy is limited because transactions are visible to everyone on the network. Also, there may be transaction fees or gas fees, and that can fluctuate or sometimes be high. You can think of public blockchains like a public park. Anyone can enter and use it, but you have less control over who's there and what happens. Private blockchains, on the other hand, are restricted and controlled. These are invitation-only networks where access is limited only to approved members, and these are often used by businesses or consortium. And the key benefit of private blockchains is that organizations have greater control over who can see, verify, or modify data. Some advantages of this approach: faster and more efficient because fewer participants are involved, validation and transactions are faster. There's better privacy and compliance options for regulated industries, and easier customization for specific use cases like banking and insurance. You can think of it like a private office building. Only authorized people can enter, and the company manages security and operations. Blockchain networks can also differ by who is allowed to participate and how much control they have. Looking at this slide, you'll see permissionless versus permissioned and that spectrum. Permissionless means anyone can join and interact, while permissioned means access is restricted to only approved participants. So thinking back to public blockchains, those very much fall in the permissionless category here. They're open to anyone. There's no central authority or gatekeeper. Participants can read, write, and verify transactions freely, which again promotes maximum transparency and decentralization. There is a hybrid approach in the middle, which is a combination or a mix of permissionless and permissioned blockchains. This approach combines open access with controlled participation. So a central organization may manage some parts, but others remain open, public, and decentralized. This is a balance of transparency with privacy and governance needs. And this can be useful for organizations that want openness, so some form of public data, but also keeping certain internal processes private. You can think of this as like a museum. It's open to the public, but certain areas are staff only. And then in the permission category, we have a private example where access is completely restricted. Only approved users can participate. One organization controls permissions, governance, and validation, which again can lead to higher speed transactions, higher privacy and compliance, but less decentralization. And this setup is common in financial services, healthcare, and enterprises that handle sensitive data. It's like a private company's intranet, secure, closed, and managed by one entity. And then the bottom right example is a consortium setup, which is controlled by a group of organizations instead of one, where participants share governance responsibilities and validation rights. This is a balance of collaboration and trust amongst trusted parties. This is common in supply chain, banking, and trade networks where multiple stakeholders are needed. You can think of it like a joint venture where several companies share ownership and decision-making rights in that closed group. The key takeaway here is that permissionless is open participation and decentralization, whereas permissioned is closed access and governance, and organizations choose the model of blockchain setup based on their needs for openness, control, and privacy. Hopefully, these blockchain concepts are helpful as an intro to better understand key properties of blockchain. We also wanted to share some notable news events that you may have seen that I think help set the stage for where blockchain is at in the current environment. Our first example here is that the U.S. Securities and Exchange Commission, the SEC, is exploring ways to allow companies to issue and trade stocks directly on blockchain networks. This is referred to as trading on chain. And this would represent a major shift in how securities are managed and traded, moving away from traditional exchanges and clearinghouses towards digital blockchain-based ledgers. The idea is that blockchain can serve as an official record of stock ownership, reducing the need for intermediaries like transfer agents or clearinghouses. The SEC's evolving stance could allow investors to hold tokenized stocks directly in their digital wallets, right alongside things like cryptocurrencies. This could also help speed up trade settlement times. So why does this matter? First, it shows that regulators are moving from skepticism to exploration while embracing blockchain's potential, while also ensuring that investor protection and market stability remain. And this evolution really signals that blockchain isn't just about crypto anymore. It's about becoming part of the financial system's core infrastructure. The second example I'll share, I'm sure many of you are familiar with the company Swift. Swift is a major player in the banking and finance industry. In short, they are a trusted network for telling banks how to move money and to communicate. They provide messaging services between financial institutions worldwide. And recently, Swift announced that it is adding a blockchain-based ledger to its network. That ledger will act as a real-time log of transactions between financial institutions, records and sequencing and validation of transactions, and enforcing those rules through smart contracts on the blockchain. So, facing suggestions that a company like Swift could be made obsolete by the adoption of digital assets, it's really interesting to see Swift experiment and adopt blockchain technology and tokenization. So a major company like Swift implementing blockchain technology is a great example of institutional interest and adoption. So now that we've set the stage with some high-level blockchain concepts and blockchain in the news, we want to move on to our second section today, where we'll talk about blockchain use cases in the insurance industry. And my objective with this section is to highlight some real-world insurance use cases and help you better understand how this type of technology can be leveraged to improve various insurance processes. I'll start by showing an insurance value chain that includes blockchain use cases across the different areas of the insurance value chain: products pricing distribution, underwriting and risk management, policyholder servicing and acquisition, claims management, finance payments and accounting, and regulatory and compliance. As you can see, blockchain has potential to impact all areas of the insurance value chain through various use cases. We'll zoom in on a few of these use cases now. First use case we'll highlight is around proof of insurance. Blockchain can help create immutable digital records of insurance, which can help streamline proof of insurance requests and offer a tamper-proof, verifiable way to validate proof of coverage. What is proof of insurance? Proof of insurance is the documentation that confirms a person or a business holds a valid insurance policy. Today, this is almost always a paper card, a PDF, or an emailed certificate of insurance. The problem is that these documents can be outdated the moment that they're issued. and they can be forged. Third parties have no reliable way to verify coverage in real time. So how can blockchain help? Step one, when an insurer binds a policy, they write the key policy data to a permissioned blockchain. Think of it like a public notice board that only verified insurers can write to, but anyone who's authorized can read from. The blockchain is a live ledger, not a snapshot, so every policy is recorded immediately and there's no such thing as an outdated certificate. Step three, a third party wanting to verify coverage doesn't call the insurer. They query the blockchain directly and get a cryptographically confirmed answer. Smart contracts can go further, automatically notifying lenders if a borrower's policy lapses, or blocking vehicle registration renewal if insurance has expired. You can see some of the benefits of this approach on the right. The fraud proof point is especially powerful, particularly when you think about contractor and commercial insurance, certificate fraud, where businesses submit fake insurance documents, cost the industry hundreds of millions annually. So there are certainly benefits to considering blockchain for a proof of insurance use case. Next, we'll look at a use case in the finance, payments, and accounting area, specifically around the subrogation and recovery space. Subrogation is the legal right of an insurer to step into the shoes of their policyholder and recover money from a third party who's responsible for a loss. So, for example, your insurer pays your auto claim after an accident and then pursues the at-fault driver's insurer to recover that payout. It is a critical but notoriously slow and sometimes expensive process. Today, subrogation is handled on a claim-by-claim basis. Each insurer maintains their own records, and disputes can drag out for months at a time. So how can blockchain help? Step one, when a loss event occurs, all relevant parties write claim data to a permissioned blockchain. Each carrier's subrogation interests, the amount they've paid out, and their right to recover is recorded on the blockchain. Think of it like a shared spreadsheet that nobody can secretly edit. A smart contract, which is really a piece of code that lives on the blockchain, watches the incoming data. And once liability is agreed to and all conditions are met, the calculation can automatically happen. It can automatically calculate the net settlement and who owes what to whom across all carriers involved. And the shared digital ledger can help track settlements owed between companies over time, so that instead of each company being subrogated individually, at the end of a month or agreed upon a period of time, two carriers can net settle for the amount owed between the two, which can save substantial resources. Some benefits of this type of approach: a single source of truth for accounting, which accounts for claim-by-claim outcomes and owed amounts, can significantly lower operational costs through a net settlement approach. So no more trading individual checks and payments between insurers. Instead, the calculations can be recorded on a shared ledger, allowing for net settlement at the end of a period of time. In this type of construct, blockchain wouldn't replace the legal framework of subrogation, but rather automate and enforce the agreed rules within that framework. Next, we'll do a deeper dive into a third insurance use case in the claims management portion of the value chain. This use case is something near and dear to RiskStream's heart because we have real life insurers using blockchain to help in the auto claims F&OL space. So this is where we will discuss RapidX. RapidX is a real life blockchain use case and solution being used by two major auto insurers today. So we'll do a deeper dive into this particular use case and the RapidX blockchain technology. Let's start with an overview of RapidX. RapidX is RiskStream's auto claims data exchange solution, which uses blockchain technology to streamline data exchange between insurance carriers. So instead of companies needing to call one another or email each other to report claims and share information, first notice of loss and claims data can be exchanged with the click of a button. The visual on the right explains at a high level how it works. Carrier A can integrate their claim system to a blockchain node, and this enables them to share claims information directly to any other carrier on the network. So in this example, Carrier B. Essentially, it allows claim systems of all type to talk to one another in a private, secure environment. There's no intermediary, so this is a decentralized network allowing for private permission data exchange between companies. And that carrier-to-carrier data exchange is particularly relevant when two carriers have a mutual accident event together. What types of data can be exchanged through RapidX? RapidX supports exchange of over 100 different data variables, all the typical data fields that you would expect to see in an insurance claim file, information about the vehicle, the year, make, model, the VIN number, the license plate, information about the drivers and the passengers in the vehicle, claim and policy info, right? So claim number, policy number, loss location, date of loss, information about injuries. Was someone injured? Was there a fatality involved? Did someone treat with a service provider? For a little bit of a deeper dive on the data can be exchanged on RapidX, here is a snapshot of the full data model. So what this means is that insurers using RapidX can plug into the network and exchange these data elements with one another, again, in a private permissioned manner. Here's a loose diagram of the operational workflow. So in this example, Carrier A's policyholder reports the claim. As soon as Carrier A sets up the claim and adds Carrier B as the opposing carrier, an FNOL notification is triggered over to Carrier B. Carrier B has a claims team, a team of processors that is assigned to intake those notifications and reach out to customers when appropriate. And this gives Carrier B the opportunity for more rapid intervention, quicker investigations, and ultimately faster claim resolution. This type of information sharing really goes both ways, though. So you can imagine that the red arrows also point back to Carrier A, right? So information can be exchanged from Carrier B back to Carrier A. But really the purpose is for first notice of loss reporting and information exchange on existing claims to better expedite claim handling and enrich data on both sides of the claim. And trusted data exchange between carriers has a direct benefit on time to FNOL. From data exchanged on RapidX, we measured that there was roughly a 7-day improvement in time to first notice of loss compared to how quickly carriers are notified to first notice of loss through traditional mechanisms. So this type of time savings can drastically help auto insurers more proactively identify claims and resolve them more quickly. Using blockchain for early first notice of loss and claim intervention has a number of downstream business impacts, and you can see some of the buckets highlighted here. First, early claim and exposure identification can be valuable in avoiding unnecessary legal escalation. Second, it can reduce the hunting and gathering that many claims reps have to go through as part of the claim handling process, and also reduce reliance on claim lookups and searches through vendors. Third, becoming aware of the opposing carrier more easily and quickly can reduce the need to hire collections vendors to help with recovery, particularly in instances where you may not know the other carrier right away. Fourth, by connecting with customers more quickly, FNOL data exchange can help impact rental and storage days. When cars aren't sitting in a yard somewhere, and the quicker the repair can happen, the less time the customer is in a rental car. And the last bucket here, there are direct repair network efficiencies as well. Earlier claim intervention on behalf of the insurer makes it more likely that preferred repair networks are utilized. So early data exchange amongst a trusted group of carriers can lead to early intervention and early identification of exposure, which can positively impact several areas of insurance downstream, which you can see here. So overall, RiskStream's role as a nonprofit is to facilitate a trusted environment using blockchain, where carriers can submit data and receive data from the network back, to ultimately benefit the insurance business and the customer as a whole. That wraps up our section highlighting the auto claims use case and the RapidX solution. That, again, is an example of how blockchain is being used today by auto insurers to expedite claims handling and first notice of loss. And when we think back to kind of the public versus private concepts that I led with, this is very much a consortium type use case where the actual claims data is being exchanged privately, right? The claims data itself is not being put on a blockchain. It is sent via private messaging carrier to carrier. What is tracked on the blockchain is a unique identifier proving that a loss happened. So a unique identifier linking claims between carriers. And that unique identifier can be valuable when you think about the fact that all carriers today have their own claim numbers and claim IDs. We are creating, a linked claim ID on the blockchain, but that is where the kind of more public-facing blockchain piece comes in with this particular use case. For our final section today, we are going to provide a little bit of commentary on the future of blockchain, and I'll also spend time answering any questions from the audience that were submitted. So thinking about the future of blockchain, you may hear in the news about the Clarity Act and the Genius Act in the United States. And although these acts are more focused on stablecoins and the fact that the US government is working towards, formalizing regulations, it's a very positive sign for mainstream adoption, not only of those digital assets and stablecoins, but really the broader blockchain ecosystem. So if you, search the Clarity Act and the Genius Act, you'll see kind of the scope and the environment. But overall, these type of regulations will propel blockchain further into the mainstream. Large banks and other institutions are already launching their own blockchains or leveraging public chains. So institutional momentum is really going to be key here looking ahead. And use cases are already starting to move from experimentation into real world use. We just highlighted a couple of insurance-specific use cases, including the auto claims use case, which is being used for live claims data exchange today. This type of institutional backing and use will only accelerate blockchain from idea into valuable tech infrastructure over the next several years. Last area I'll highlight here is how blockchain can also support emerging AI workflows. So since blockchain provides some of those key characteristics we talked about, tamper-proof provenance, that is very valuable for documenting AI-generated content or decisions. Blockchain's decentralized identity can help solve AI agents' authentication challenges. And that on-chain audit trail becomes a very valuable source of truth for autonomous AI systems. So the convergence of blockchain with other emerging technologies is something to keep an eye on over the next few years as it becomes more mainstream and as the AI world propels forward as well. Those key characteristics of blockchain can be very valuable when you're thinking about computers and AI making more decisions, and having immutability and tracking around that is something to watch going forward. So overall, I hope you found today's session educational. I do want to open it up for questions from the audience. For anyone who wants to take a moment to submit questions, we could talk further now about any questions that the audience might have.
Great, thanks, Eric. That's great information. Stacy Phillips, our marketing director, has been monitoring the Q&A panel. So Stacy, do we have any questions?
Yes, for auto claims data exchange, is the data privately shared carrier to carrier, or is there a central repository?
Yeah, really good question. Thanks, Stacy and Paul. So no central repository. When you think about blockchain and those key characteristics, decentralization is a key property, right? So, no centralized database, no central aggregator or anything like that. The blockchain for auto use case, RapidX, enables a carrier to completely control and maintain their own data and then send that data to another carrier directly without the need for a central intermediary or aggregator. Very much decentralized, private permission exchange. So that's a really good question and a very important distinction when we think about how blockchain is constructed. So thank you for the question.
Thank you.
Yeah, hey, Eric. Oh, go ahead, Stacy.
Oh, are there any active initiatives with regards to assignments to repair facilities?
Yeah, it's a really interesting angle to explore the assignments to repair facilities because you could see how some of the tech would lend itself to that, right? When you think about connecting multiple parties and sharing data and having the tracking around it, insurers could assign automatically with the click of a button and have the repair tracked via blockchain. I'm not aware of that being a live use case today, but certainly I think another good example of where blockchain, that type of technology, can potentially impact the insurance world and really the repair world.
Great.
Good question.
Yeah. Hey, Eric, a question for me. As you were talking about RapidX, you said there's 2 carriers using it today. Are there plans to expand that to other carriers?
Certainly. As a consortium with 30 plus members, RiskStream is planning to expand and onboard additional carriers in 2026. We welcome any auto insurers who are interested in exploring some of the benefits to participate. Again, our role as a nonprofit is really to facilitate kind of a neutral, trusted environment using the blockchain. And that's where the Institutes and RiskStream comes into play. But we are already seeing, a lot of interest from our network and others in joining the network and participating in this nonprofit trusted data exchange for the use cases I described. So yes, absolutely. To answer your question, Paul, planning to onboard additional carriers here before the end of 2026. And we're excited about the really transformational potential of trusted data exchange within auto insurance.
And Eric, if more individuals would like information about blockchain or how to get involved, what would you recommend?
Absolutely. There's a lot of great resources out there related to blockchain. If you would like to reach out to me directly, I would be happy to send you some of those materials and even set up conversations about what we do at RiskStream and how we leverage blockchain within insurance. I'd be happy to connect with anyone on LinkedIn if they'd like to connect. But more broadly, would highly recommend looking at some blockchain resources out there. What's really interesting is if you look at Block Explorer, just Google Block Explorer, you can see real transactions being verified today on public chains. It's a really interesting world with potentially transformational value in a lot of areas. So very much encourage audiences to explore, be curious about this type of technology, and then start thinking about real world use cases. Lots of stuff going on in the banking and finance world. As I mentioned, we at RiskStream are doing a lot in insurance, so connect with me on LinkedIn or reach out. Be happy to give you some educational resources or talk individually.
Great. Stacy, any additional questions?
No, not at this time, but it will be recorded and feel free to share with colleagues as well. So thank you, Eric.
Great. Thanks, Eric. Very, very informational. I really appreciate it. As we conclude today's webinar, I'd like to remind everyone that the CICA Connects conference is scheduled for September 29th through October 1st of this year in San Antonio, Texas. We'd love to have you all join us. We'll be discussing the rise of the software-defined vehicle and its impacts on the collision industry. And with that, we are done. So thank you, Eric, and have a good day.
Thanks, everyone.